For people new to the stock market, it can seem like such a complex beast, but today we're going to explain what the stock market actually is and how it works. How's it going, guys? Ryan here with another stock market video, and today we're going back to basics and we're talking about how the stock market works and what it actually is. And this is fundamental to understand before you start your investing or trading journey, because it really will set the foundation for how you interpret all the information that hits you at once. And the first thing we're going to talk about is how simple it actually is to understand. It's not the complex beast that you think it is and that is portrayed in the cinemas, on TV, and in the media. But before we get into that, guys, please remember to like this video. It helps me out so much, and subscribe to keep up to date with all the latest content. And if you do have any comments, queries, or questions, feel free to leave them down in the comments section below, and I'll do my best to help answer them and make sense of what the stock market is for you guys. So without further ado, let's get straight into it. So what is the stock market itself? Well, it's actually quite simple, and basically what it is a mechanism for bringing together buyers and sellers in order to trade or exchange securities. Now you're thinking, whoa, that's a bit complex, but securities is really the word you want to be focusing on here. And all it means to exchange securities is literally buy and sell stocks, buy and sell bonds, buy and sell ETFs, that sort of thing. And it's really that simple. So effectively what you're doing is simply just putting together a marketplace for investors to come in and buy and sell shares. That is it. That is the stock market in the most basic sense. But let's get into a bit more of the details. So what actually is a stock or a share? So a stock itself is, your tickers. So for instance, you'll have Tesla, TSLA, or whatever the code is. I think it's something similar like that. That is a stock. Tesla has its own stock on the market. A share is then a portion of that stock. So effectively, when you buy one share of a company, you're paying X amount, and that's known as the share price, or effectively the stock price if you're just looking at the company itself. So all you're doing is buying a share, and a share is just a portion of the company. So effectively what you're doing is you're buying a part of the company. So you could buy, I don't know, 1%, you could buy 0.0000005%, you could buy any sort of portion, but there's obviously rules around it. If you own 50% or more of the shares, then effectively you're the owner of that company. So you'll often see that the majority of shares are held by the top 20 shareholders, and effectively this is generally the directors of the company as well as some other institutions. And what you'll realize is the majority of these shares that are currently on issue are actually spread between these people quite evenly, except when you get probably into the top three. You'll see if, for instance, an owner like a person such as Elon Musk, if we stick to the topic of Tesla, will own a very, very large portion of the shares. Now, this does not mean that if you necessarily bought 50% of the shares that you would own the company. Not all the shares of a company are necessarily on issue on the stock market. So tends to be what happens is that the shares are always in the majority of the company itself, so no one could come in and literally just take over the company. And you can't do that anyway. There's rules and regulations put in place by the stock exchanges so that you can't do these sorts of things. And moving on to the topic of stock exchanges, you'll hear that term a lot. And a stock exchange, for instance, in Australia is the ASX, or the Australian Stock Exchange. You'll see NYSE, which is the New York Stock Exchange. That's a big one in the US. Every single country around the world, or the majority of countries around the world, will have their own stock exchange. And all this is, as we said before, a mechanism for buyers and sellers to buy or sell shares. It's simple as that. And when a stock lists on the stock exchange itself, effectively what the company is doing an IPO, which is known as an initial public offering. And this is the first opportunity for people to buy into a company. And you think, okay, well, what's the benefit of doing this? Well, effectively, what the company is doing is putting a portion of the company's value available on the market for you as an investor to purchase. They're effectively raising money for them to use in their business. And you'll often see occurrences such as capital raising occur in order to raise additional funds. And this is where you've got a company which is already listed on a stock exchange who need more money, so they'll do a capital raise and effectively issue shares that you can buy, or generally it's to pre-existing holders and they can buy more shares at a better rate for them, or they might have some other advantage such as options. Now that is really as simple as the stock market actually is. And effectively you don't really need to concern yourself with all the real intricacies of the stock market. Simply all you've got to know as a beginner investor or trader is that your stock is a company, it's listed on the market values that company, which is called the market capital, and effectively it is the share price of the shares times by the number of shares on issue. And that is the market cap. That is what the market, or the stock market quite literally, is valuing that company to be. So if you see a stock which is listed at $1 per share and you see one which is listed at 20 cents per share, the 20 cent per share company could be more valuable than the $1 per share company. And that comes down to the number of shares on issue, because once again, if you had $1, a million shares on issue, the company's worth $1 million, right? Whereas if you had 100 million shares on issue and it's 20 cents, the value of that company is actually significantly more, because you're going 20 cents times by that $100 million. And that is the crux of how a share is actually valued in itself. And that's really all there is to the stock market. You've got investors exchanging securities. So you've got buyers, you've got sellers, and you've got the stock, and they're trading them between each other. It's simple as that, guys. Don't get caught in the detail. Don't think it's some absolute complex beast that you need to read a million books to understand. It's really not that hard to get your head around once you understand the real basics of it. But in saying that, I would highly recommend doing lots of reading, watching lots of videos, and educating yourself about the stock market, because that's the stock market, but it gets really interesting when you're talking about the psychology behind people buying and selling shares. That's when you start getting the real complexity of the stock market involved. But the stock market as a platform itself is quite simple. So I hope you enjoyed today's videos, guys. I know it was quite quick, but it really, I wanted to get to the point. I just wanted to explain exactly what the stock market is and how it works and how it operates. So with that, guys, please remember to leave a like and subscribe for more content. And if you do have any comments or questions or queries about what the stock market is or how it works, maybe some more of the intricate details, or just a concept you don't understand generally at all, leave it down in the comments section below. I'll be more than happy to help you out, or at least guide you in the right direction to further your education. So with that, guys, I hope you have an awesome day. See you next time. Cheers.